Hi, this is Juliet Orfiano. Welcome to my video. If this is your first time on my channel, please like, share, and subscribe so I can notify you when I have a new video. This is the continuation of part 15 about inventories. I discussed in part 15 about other inventory issues. Just click above or the link below this video to watch part 15. In this video, I am going to discuss about the inventory estimation method. Inventory estimation methods. When inventory items cannot be physically counted anymore, as the goods may have been damaged by or lost in a catastrophes, such as fire or flood, or when the inventory or cost of goods sold would be presented in the interim financial statements such that a complete physical count may be too impractical, or to validate inventory figures determined through physical count, the value of inventory may be determined using an estimating procedure. These are two common methods of estimating the cost of inventory: the gross profit method and the retail inventory method. Gross profit method. The gross profit method of estimating inventory costs is based on an assumed relationship between gross profit and sales, or between gross profit and cost of sales. The gross profit method depends on the accuracy of the gross profit percentage. The accuracy may be enhanced by adjustments for known changes in the relationship between gross profit and sales, and varying gross profit rates in different departments or types of inventory. The calculation of inventory under this method is as follows. Beginning inventory, add net purchases, cost of goods available for sale, less estimated cost of goods sold. A. Gross profit rate is based on sales, net sales times 100% less gross profit rate. Or letter B, gross profit rate is based on cost, net sales divided by 100% plus gross profit rate. Estimated cost of ending inventory. The amount obtained is reported as ending inventory for interim financial reporting purposes, or is considered the amount of loss in cases of fire, flood, theft, and similar events, unless there are undamaged or partially damaged merchandise. To illustrate, assume the following figures for RME Company for the 6 months ended June 30, 2009. Inventory January 1st, 2009, 500,000 pesos. Purchases, 2 million pesos. Sales, 3 million pesos. Purchase returns, 80,000 pesos. Purchase discounts, 5,000 pesos. Sales returns, 60,000 pesos. Sales discount, 4,000 pesos. Determine the estimated cost of June 30, 2009 inventory, assuming that the company maintains a gross profit rate of A. 25% on sales, letter B. 25% on cost of sales. The cost of goods available for sale is determined as follows. Inventory January 1st, 2009, 500,000 pesos. Add net cost of purchases. Purchases, 2 million pesos. Purchase returns, 80,000 pesos. Purchase discount, 5,000 pesos. Total of 1,915,000 pesos. The total cost of goods available for sale is 2,415,000 pesos. The cost of June 30, 2009 inventory is further computed under the two assumptions as follows. Total cost of goods available for sale under A, gross profit rate is 25% based on sale. 2,415,000 pesos. Total cost of goods available for sale based on letter B. Gross profit rate is 25% based on cost of sales 2,415,000 pesos. Estimated cost of goods sold 2,940,000 times 75%. Under A, gross profit rate is 25% based on sales is 2,205,000 pesos. 2,940,000 pesos divided by 125% under B, gross profit rate is 25% based on cost of sales is 2,342,000. Estimated cost of ending inventory under A, gross profit rate is 25% based on sale is 210,000 pesos. Estimated cost of ending inventory under letter B, gross profit rate is 25% based on cost of sales is 73,000 pesos. For purposes of computing cost of goods available for sale, purchase returns and purchase discounts are taken into consideration. The reason is that the net cost of purchases is actually experienced or incurred before setting up the sales price. However, for purposes of computing the cost of goods sold using the gross profit method, net sales is computed by deducting sales returns only. Thus, in the illustration given, the net sales of 2,940,000 pesos is computed as 3 million sales less 60,000 pesos sales returns. The sales discounts of 4,000 was simply ignored. Sales discounts are normally disregarded in computing net sales only for the purpose of computing cost of goods sold applying the gross profit rate, because the sales discounts do not involve physical flow of merchandise back to the company. However, in some exceptional cases, when sales discounts are significant and the company anticipates the same in setting sales prices, sales discount may be considered. When these are undamaged or partially damaged merchandise, computation of inventory loss is further continued as follows. Estimated cost of inventory less cost of undamaged inventory, realizable value of partially damaged inventory but not exceed cost, estimated inventory loss. To illustrate, assume the following data. On November 30, 2009, a big flood caused severe damage to the warehouse of ABC Merchandising Company. The company suffered a big loss on its merchandise inventory. The following information was available from the accounting records of ABC. Merchandise inventory beginning January 1st, 2009 to date of flood, 200,000 pesos. Purchases January 1st, 2009 to date of flood, 1,190,000 pesos. 2008, 1,120,000 pesos. Purchase returns January 1st, 2009 to date of flood, 30,000 pesos. 2008, 20,000 pesos. Sales January 1st, 2009 to date of flood, 1,560,000 pesos. 2008, 1,200,000 pesos. At the beginning of 2009, the company changed its policy on the selling prices of the merchandise in order to produce a gross profit rate of 5% higher than the gross profit rate in 2008. Undamaged merchandise marked to sell at 50,000 pesos and damaged merchandise marked to sell at 15,000 pesos were salvaged. The damaged merchandise had an estimated realizable value of 4,000 pesos. Required Determine the estimated cost of merchandise inventory loss from the flood on November 30, 2009. Solution. Step 1. Compute the gross profit rate for year 2008, then followed by the gross profit rate for year 2009. Cost of goods sold is equals to 1,120,000 less 20,000 less 200,000 is equals to 900,000. Gross profit is equals to 1,200,000 less 900,000 is equals to 300,000. Gross profit rate 2008 is equals to 300,000 divided by 1,200,000 is equals to 25%. The company increased its gross profit rate by 5% in 2009. Therefore, gross profit rate in 2009 is 30%, 25% plus 5%. Step 2. Compute the estimated cost of merchandise inventory at the time of flood. Merchandise inventory, January 1st, 2009 is 200,000 pesos. Add net purchase, 1,190,000 less 30,000 is equals to 1,160,000 pesos. Cost of goods available for sale, 1,360,000 pesos. Less estimated cost of goods sold, 1,560,000 pesos times 100% less 30% is 1,092,000 pesos. Estimated cost of inventory, November 30 is 268,000 pesos. Step 3. Compute the estimated cost of merchandise inventory loss from the flood. Estimated cost of inventory, November 30 is 268,000 pesos. Less cost of undamaged merchandise, 50,000 pesos times 70% is 35,000 pesos. Estimated realizable value of damaged merchandise is 4,000 pesos. Estimated inventory loss from flood, 229,000 pesos. One asterisk means that the cost of damaged merchandise is 10,500 pesos, 70% times 15,000 pesos. The amount deducted is the estimated realizable value since it is lower than cost. If the realizable value is higher than the cost of damaged merchandise, the amount deducted is the lower amount or cost. Other than estimating inventory loss due to catastrophe, the gross profit method is also useful for validating the amount of inventory determined by physical count and for valuing inventories and cost of goods sold for interim reporting purposes. However, the gross profit method of estimating inventory is not allowed for annual external financial reporting purposes. Thank you for watching my video. I hope you learned something from this video. I did part 17 and continuation of this video wherein I discuss in part 17 about the inventory estimation method, the retail inventory method. Just click above or the link below this video to watch part 17. Don't forget to like, share, and subscribe on my channel so I can notify you if I have a new video. Once again, this is Juliet See you on my next video.